estimated manufacturing overhead is greater than the actual one. So your estimated or your forecasting or your applied manufacturing overhead greater than the actual manufacturing overhead. It means you over allocate the cost. How much? By 30,000. So the project that we quoted or the job that we completed and we find out that the unit cost is more. So we need to decrease the cost. Why? Because in advance we charges high cost due to over applied of the estimated manufacturing overhead. Leo, you understand? Jordan, you understand?
Yes, I understand.
Alima, Ayan, Crystal,
Yes, sir.
Jackie,
Yes,
Landry, Timay, Sunho, Stella,
Yeah, sir.
right? If you don't understand, please, you can interrupt me and say, that's all right, I don't understand this. Okay? So, oh, sorry. Here we go. Now, if you understand the over applied and under applied, please answer this question. So I suggest you to pause the video, read the question, and then compare the answer. So I'm just going to give you 3 minutes to read and answer. Okay, let me read the question. Tiger Incorporation had actual manufacturing overhead cost 1,21,000, and the predetermining overhead rate is 4. Tiger Incorporation worked 290,000 machine hours. Tiger's manufacturing overhead is, what is the answer? Alima?
I don't know. B?
You said B. Leo?
I also have B.
B. Okay. Landry, Jordan, Crystal?
my answer is B.
B, sir.
Jackie?
I also think it's B.
How B? Let's solve this. So we know that 290,000 machine hours are actual. What would be its applied? You multiply it, or what would be its estimated? You multiply this with 4. Answer would be 290,000 multiplied by 4. It is 116,123,4. So now tell me, 29,000 divided by 4, again double check. Yes, 1160. So this is the estimated, because we multiply this with predetermined. So this is the estimated or applied. Now your estimated is less and your actual is higher. It means you underestimated. So we call this under applied. So that's why B is the answer. Well done, everyone. Now I'm making a group breakout activity. Please take a picture and then solve this question together. I'm going to give you 20 minutes to do that. Please, everyone, take picture. Meanwhile, I am making a breakout. Okay, everyone. I am opening the breakout rooms.
The actual hours
Number,
estimated by. Okay, so I'm confused too.
this is our group number.
Then
Number 2. Okay.
Number 2. Okay. So why don't you?
So we are confused. We don't really understand. We have to use for applied overhead actual direct labor hours, which I think would be 12,000 times 18.20, but I'm not sure if it's correct. And pre things we have to use 11,500 times 18.20.
You're asking from me or among your members?
I'm asking you because we are not sure about
we are discussing
that one.
actually.
Okay, so can you see the question here?
No.
Here we go. Let me give you. Can you see that?
Yes.
Okay. So let me read this. Osborne Manufacturing used the predetermined overhead rate of 18.2, right? So that's your predetermined overhead rate. The predetermined overhead rate was based on, which means this is the extra information which are telling you that it is based on this much estimated manufacturing overhead and 12,000 direct labor hours. The company incurred actual 11,500 hours, and the cost is 215,000. So you need to find out that whether it is applied or under applied. So you need to tell me. So this rate is based on 12,000. It means the cost here is, we cannot compare this cost with this cost. Why? Because this cost is based on 11,500 and this cost based on 12,000. So we would find out what would be the estimated cost if they had planned 11,500. So just multiply 11,500 with the predetermined overhead rate, which is 18.20. Then you find out, then you compare that cost. This is the estimated cost based on 11,500, and this is also based on 11,500, and then you can compare underapplied or overapplied. Understand?
Yeah. Sir, can you explain number 2 also?
What?
The question number 2.
This one.
The cost of goods sold. What is the exact mean?
Cost of goods sold is how much goods are sold, right? For example, we have make 100 goods and 80 are sold. 20 will go to our inventory right?
Mm-hmm.
And 80, it means we sold, for example, each 100 each, right? So in order to find out that whether we are having a profit or loss, you must, so how much is now the sales? 80 multiplied by 100, answer is 8,000, right? This is just for example. And you need to find out that among this sales, how much is my profit? So you would less the the product cost of 80 units, right? Those units which are sold, not the 100 units, right? So you will decrease from our sales the cost of sales, right? Understand? So that is called cost of goods sold. Cost of the goods that are sold, not the goods that are manufactured. So we manufacture 100, but we sold 80. So our profit is should be based on 80 units that we sold, not the 100 units.
So the question is asking if we are under apply, right? So
Yeah.
the gross profit will increase or decrease, right? We just need to
You need to tell me that whether this cost, whether we should increase the cost of goods sold or whether we should decrease the cost of goods sold.
Oh, okay, okay,
Okay.
okay. Okay.
Okay, so
Okay, so
since we already have
okay.
209,300, we have to subtract, right? The actual overhead minus the one we found.
Okay, group 3. You understand the question?
Yes. I think we finished already.
Already. Okay. I just finished explaining to the other groups. Okay, so can you share screen and let me know what did you do?
Oh, I wrote it down on paper, so I think I cannot share the screen.
Okay. Okay, so what's your answer?
Well, our answer is that it's over applied for how much? 3,400, and that means that the effect of it is that the gross margin would increase.
Leo, I think you forgot our discussion on predetermining overhead rate. Your answer is not correct.
Oh, we have first. Do we first have to calculate the per hour, the cost per hour, and then convert it?
Let me just give you the idea here. Here we go. So they have predetermining overhead rate, right? Oh, there is that goes. So here,